This video is created by Jagrat Creation. It is on redemption of debentures. Not only redemption of debentures, redemption of preference shares, also bonus shares, issue of bonus shares. Observe the sum on the screen, it's an important sum. This is a sum which I wish to solve here before you. The following is a summarized balance sheet of Bambam Limited as on 31st of March 2017. Source of fund: authorized share capital, equity share capital, preference share capital, issued subscribed capital and paid up capital. Equity share preference shares, share of rupees 10 each, preference share 100 each. Security premium, general reserve, profit and loss account 2,509%, debentures 182,50,000, creditors. Application of funds, fixed assets, investment, market value 5,80,000. Deferred tax asset that you will study as per AS 22. Sundry debtors, cash and bank balance, preliminary expenses. In an annual general meeting held on 20th June 2017, the company passes the following resolutions. Split equity share of 10 each into 5 share of rupees 2 each on 1st of July 2007. So share of 10 each is splitted into share of 2 each. So 1 share of 10 each is converted into 5 shares of 2 each. Redeem 8% preference shares at a premium of 5%. Redeem 9% debentures by making offer to the debenture holders to convert their holdings into equity shares at rupees 10 per share, or accept cash on redemption to issue fully paid up bonus shares in the ratio of 1 equity share for 3 shares held on the record date. On 10th of July, investment were sold for rupees 5,55,000 and the preference shares were redeemed. 40% of the debenture holders exercised their option to accept cash and the remaining claim and their claims were settled on 1st of August 2017. The balance sheet date is 31st of March and the claim of debenture holders is settled on 1st of August 2017. So when you redeem the debentures, you are required to pay 4 months interest. You are requested to journalize. The company also fixes 5th September 2017 as the record date, and the bonus issue was conducted by 12th of September 2017. You are requested to write journal entries for the above transaction, including cash transaction, and prepare the balance sheet as on 30th September 2017. All working should form the part of your answer. Now this is an important sum. Now how many main transactions are there? Equity share split up transaction, preference share redemption transaction, debenture redemption transaction, and bonus issue. The most important point that after splitting up the equity share into 2 rupees, the debentures are converted into equity shares at an exchange value of 10 each. So share 1 equity share of 2 each given at a price of 10. So 8 is the security premium at the time of conversion of debentures into equity share. That's an important point of this sum to be understood by the students. Now let me start. So here I am going to prepare necessary accounts. This is my notes on accounts because I am required to prepare the balance sheet. Let me write down the various titles in my notes on accounts. First transaction to split equity shares of 10 each into 5 equity shares of rupees 2 each. The equity share capital is how much? 3 lakhs. So 3 lakhs equity share capital divided into a share of rupees 2 each. So number of shares are 1,50,000. What is the journal entry? Equity share capital rupees 10 account debit to equity share capital rupees 2 account credit, same amount. Being equity share of 10 is splitted into 5 equity shares of rupees 2 each. This is how journal entry is recorded. Now how will it be reported? Authorized and subscribed capital are right here because this is a space for authorized share capital. Issued, subscribed and paid up capital 3 lakhs. But here the denomination has said 1,50,000 equity shares of rupees 2. That's an important point. Second transaction. Redeem 8% preference shares at a premium of 5%. On 10th of July, investment were sold for rupees 5,55,000 and the preference shares were redeemed. So investments are sold, so cash is made available. But for the purpose of redeeming preference shares, you are required to make provision out of reserves otherwise available for dividend by transferring necessary amount to capital redemption reserve. So here investments are sold, cash and bank account debit to investment account credit, to profit on sale of investment credited to profit and loss account. So cash and bank account is debited here, profit and loss account is credited. These investments are sold, so cancel. They are sold, so they don't exist now. So investments are sold. Now I am required to redeem preference shares. Let me prepare a working note. 5 lakhs at 5% premium. So 5,000 into 105, 5,25,000. Out of that preference share capital is how much? 5 lakhs. And 25,000 is the redemption premium. This preference share redeemed out of profits otherwise available as dividend. So amount transferred to capital redemption reserve account from general reserve for redeeming these preference shares. And this redemption premium is adjusted against security premium. So this is how I am going to write down the journal entries. So first of all, redeemable preference share capital account debit, preference share redemption premium account debit to preference shareholders account credit, preference shareholders account debit to bank account credit. So bank account is credited for payment made to preference shareholders. Now provision is to be made out of general reserve. So general reserve account debit to capital redemption reserve account credit and security premium account debit to premium on redemption of preference shares account credit 25,000. So this is how 4 journal entries are recorded. Now from general reserve 5 lakhs will be deducted and capital redemption reserve account will appear in reserves and surplus here 5 lakhs. And 5 lakhs are required to be deducted from this 6,50,000. This is an important note that I keep. This I am going to use for the purpose of reporting reserves and surplus in my notes on accounts at the end. From security premium 25,000 is required to be deducted. So I put a note for that. That will be reported at the end in a title of reserves and surplus. So let me write down 25,000 here for my memory. So now next transaction, debenture redemption. To redeem 9% debentures by making an offer to the debenture holders to convert their holdings into equity shares at rupees 10 per share and accept cash on redemption. 40% of the debenture holders exercise the option to accept cash and their claims were settled on 1st of August 2017. From 31st of March to 1st of August, 4 months, debenture interest is payable. Let me prepare a working note for that. So debentures, 2,50,000. I am required to pay debenture interest for 4 months, 2,50,000 into 9%, because 1st of August, 4 months. From April onwards, April, May, June, July, it is 1st of August for 4 months. So this is the total amount payable bifurcated. These are the debentures. This is the debenture interest. Now, 40% debenture holders exercise the option to accept cash. So 40% of the debentures are paid cash. And remaining 60%, they accepted the equity shares. Now when they accepted equity shares, so 60% of 2,50,000, 1,50,000 is to be paid by giving share. At a what price? At a price of rupees 10 each. So share is to be given at a price of 10 each. Its face value after split is 2. So 8 rupees is the premium. That's an important point. So 1,50,000 is to be paid by way of equity shares. The exchange value determined for the share is 10. So number of shares given are 15,000. It was split in the share of rupees 2 in the first transaction. So 15,000 into 2 is the equity share capital, 30,000. And 15,000 into 8 is the security premium, 1,20,000. This is the security premium. This is how this transaction is being explained by preparing a working note. On the basis of this explanation, let me write down the journal entry. So, debentures account debit, debenture interest account debit to debenture holders account credit, debenture holders account debit to bank account credit. How much? This is paid in cash and interest is paid in cash, so 1,07,500. For payment to debenture holders, the equity share capital given 30,000 to equity share capital account credit, and security premium account will be credited with 1,20,000. So security premium account credit 1,20,000. This is how the claim of debenture holders is being settled. Now this debenture interest paid is to be transferred to profit and loss account. So profit and loss account debit to debenture interest account credit. This is how the entries are recorded for the purpose of redemption of debentures. Now its effect is to be demonstrated. Cash and bank paid to debenture holders. Equity share were 3 lakhs, 30,000 is added. So total equity share capital will become 3,30,000. The number of shares will become 1,65,000. So 1,65,000 equity shares, share of 2 is 3,30,000. Security premium you are required to add 1,20,000. Profit and loss account debited for debenture interest paid. This is how these effects are demonstrated. Now, next transaction. Bonus issue. To issue fully paid up bonus shares in the ratio of 1 share for every 3 share sale, 3 share of 3,30,000. You are required to give bonus. Number of shares are 1,65,000. Now, 1 share is to be given for 3 shares. Now the next transaction, bonus issue. 1 share for 3 share sale, number of shares are 165. So let me prepare a working note for that. For 3 shares, 1 bonus shares, how much for 1,65,000? So 55,000 bonus shares of rupees 2 each, 1,10,000 bonus is given. That is to be given out of capital redemption reserve. So capital redemption reserve account debit to bonus to shareholders. Bonus to shareholders account debit to equity share capital account credit. This is how bonus is given out of capital redemption reserve. So capital redemption reserve from 5 lakhs, bonus given 1,10,000. So capital redemption reserve balance will become 3,90,000. And in share, say this is a security premium, 6 lakhs minus 25,000 plus 1,20,000. So 6,95,000 is the security premium. Now bonus is given, so 3,30,000 capital will become 4,40,000. So number of shares will become 2,20,000 shares of rupees 5 each. I'm sorry, 2,20,000 shares of rupees 2 each. So this is how this bonus entry is being recorded. Now after recording all these things, let me copy the remaining details of this balance sheet. These are the crossed items are already considered. So copy the remaining balances. Equity share 50,000 equity share of rupees 10 each in authorized share capital. The split takes place. So share is recorded as 2 each. That's an important point. Preference share as it is, no change. General reserve 6,50,000 minus 5 lakh 1,50,000. Opening balance of profit and loss account creditors. Tangible fixed assets. Deferred tax asset. Debtors. Opening cash and bank balance. Preliminary expenses is to be written off against profit and loss account. That's an important point. Now, this is a balance. Cash and bank balance. Profit and loss account closing balance that I will write here. Now if I make totals, authorized share capital, this is a total of reserves and surplus. Now I want to prepare the balance sheet. Remember one thing, reserves and surplus I have recorded security premium, capital redemption reserve, general reserve, profit and loss account. This is not the style with which the student should report in examination. But as I have got a limitation of space on a screen, I write in this fashion and go on making addition and deduction while explaining the sum. So it is permitted for a teacher, but student should report this reserves and surplus in examination in a manner how it has been changed. So now I have to prepare the balance sheet. These are the titles of balance sheet. As I told to you, the reserves and surplus should not be reported in this fashion. You should mention how the balances have changed during the year, and this is how it should be reported. Just observe. Security premium balance 5 lakhs, redemption premium return of 25,000, premium on issue of bonus shares 1,20,000, so 6,95,000, capital redemption reserve minus bonus given, general reserve transfer to capital redemption reserve, similarly profit and loss account balance 97,500. This is how this reserves and surplus 13,32,500 should be reported. Now let me write down share capital, reserves and surplus, current liabilities, tangible assets, fixed assets, cash and cash equivalents, trade payables, other current assets, have the total of equity, liability and assets. It should agree 19,42,000. Once again, the reserves and surplus 13,32,000 should be reported in this at this place in notes on accounts in this fashion, because that is the requirement of Schedule 3. But as I was explaining the sum and the limitation of space, because of which I have just demonstrated the amount and made addition and subtraction while explaining the sum, but they are reported in this fashion. This is an important point to be understood. So this is how I have prepared necessary account, notes on accounts. I have also recorded the journal entries. These are the journal entries that has been recorded. This is how I have tried to explain you some. I feel that you have followed all these things. Thanks to all.